You're watching Silver News Daily. Subscribe for more.
Silver is on the brink of a massive breakout. If you think it's too late to get in, think again. Don Current reveals why silver's surge is just beginning, and the opportunities might be bigger than ever before. What if I told you silver could hit levels we've never seen before, and it's all unfolding right now? In this video, we'll dive into why experts believe silver could be the most explosive investment of the year. Stick around. You won't want to miss what's coming next.
Pretty important levels. So you said decade high, but it actually was there in May. So we've been, well, maybe I could be wrong, maybe 33, but we were at 30 in May, we were at 32.50. So now I guess 33.70. Yeah, but 33 was a very important level, no doubt about it. So now the key for me, I was looking at 33, but as the next level to get across, which I thought was very important. But for me, the more important level is 35. And I don't think I think right now everybody seems, especially the technicals, all the TA guys are going to tell you that we're broken out and we're off to the races here. And silver and the miners, I mean, the HUI, once you went above, whenever you get above important thresholds, you tend to get breakouts in, for instance, in the miners, like the miners were up, a lot of miners were up over the average. I think GDXJ was up over 5%, SILJ up 7%. So you had a lot of miners up 10% today. And so people think we're going to get follow through. We've hit these levels and now we're off to the races kind of thing. But for me, because of the election coming up here in 3 weeks, that creates uncertainty as far as, are we off to the races here? In other words, are we not going to correct? For instance, somebody sent me a tweet, is $30 going to hold on silver? Or, basically now we're at 33, is the floor now 30? That's a big question for people. And now we're at 2,700. So, what's the floor for gold? Did it go all the way to 2,500? I keep inching my floor up. I had it at 2,200, then I took it to 23, I took it to 2350. Maybe it's going to get to 2,400, depending on what we do here the next couple weeks. But there's some factors in play here. This isn't a normal situation because of the election. The election is really important because both candidates are going to impact the direction of the economy, the direction of the metals. So
to understand why silver's price might be on the verge of a historic breakout, let's first look back at its most explosive moments. In 1980, silver hit a record high due to a dramatic attempt at market manipulation by the Hunt brothers, skyrocketing prices to nearly $1.50 per ounce. Fast forward to 2011, silver almost touched that same peak again, driven by geopolitical tensions and economic uncertainty. These two spikes show us one thing: silver thrives in turbulent times. And with today's volatile global environment, we might be on the brink of another major rally. But what's different now? And why could this time be even bigger?
Initially, but not very much because the gold wants to go higher. But if you get let's say that the S&P falls 500 points in 2 weeks, which is what I think is going to happen, that's going to put a lot of pressure, downward pressure on everything. So initially, I think gold's going to get sucked into that selling pressure. It would be historic if gold decouples and gold just keeps ripping higher and the stock market just crashes 500 points in 2 weeks. That would be historic. That's usually not what happens. So, but because I think gold wants to go higher, so we have this initial selling. Let's say the S&P drops 500 points in 2 weeks. I think that gold will go down 10%, but 10%, I had it at 2350, but now it's like, I think 10% is like 2,400. So like I said, I keep having to raise my floor, but I don't think gold's going down more than 10%. And it might only go down 5%, but I would expect at least a 5% drop if the S&P crashes. And then what I expect to happen is a decoupling, and then gold goes higher and the stock market goes lower. And that's what you had. And that's a return to the 1970s and in the first decade of this century, where you had gold outperforming the stock market. So if you go back to, we've had really two bull markets in miners, 1972 to 1980. And that occurred during a period when gold went from $35 to $850, where gold was outperforming the stock market, and the stock market had a lot of hiccups during that decade. And then from 2000 to 2011, it was the same story, but you had gold going from 250 to 1935. Gold outperforming the stock market significantly, and the stock market having problems. Now, we haven't had a stock market problem since 2008. So what I think is coming is another one of those cycles where the stock market starts to have problems and gold outperforms the stock market and the miners do well. That's the scenario I think I've been waiting for that to unfold, and I think we're there. However, I don't think it begins until December. I think November, I think, is going to be a very muddy month for gold, the miners, and silver, because they're going to have these huge headwinds. And a lot of this is based on a Harris victory.
Geopolitical tensions have always been a driving force behind surges in silver prices, and today's global landscape is no exception. Historically, when conflicts escalate or international relations deteriorate, investors flock to safe haven assets like silver. Take the Syrian civil war in 2011, for instance. Heightened tensions between U.S., Russia, and China pushed silver prices to almost $1.50 per ounce. Fast forward to today, the BRICS alliance, consisting of Brazil, Russia, India, China, and South Africa, is hinting at developing a new payment system that could reduce reliance on the U.S. dollar. This shift could disrupt global trade balances and further undermine confidence in the dollar, increasing the appeal of silver as a store of value. Now, imagine the potential impact if BRICS nations move forward with a gold-backed currency, a possibility that's gaining traction. Such a move could drive investors to diversify their holdings into silver as an alternative to traditional fiat currencies. Add to that the increasing tensions between global powers and ongoing conflicts that are escalating around the world, conditions are ripe for silver to soar as investors seek protection against uncertainty. Could today's geopolitical climate propel silver beyond its 2011 highs? The stage is set for a major shift, and silver could be the first to respond. But will it be enough to break past the crucial $35 level and ignite a rally like we've seen before?
Doing any checks like that, and they're not doing any audits. So it makes it so simple to cheat. I'm expecting them to cheat. It's like the moral hazard is too high. It makes it so easy to cheat. All you have to do is get your hands on one of those ballots and just copy them and stuff them in. And if people are, like I said, the moral hazard is too high. So that's why I think Harris is going to win. And if she wins, I think that we get a crash in the stock market. And I think leading up to the election, I actually think that people are going to start to get nervous that there's uncertainty on what's going to happen by who wins. And I think that uncertainty will actually push down the S&P and push down gold because they trade together leading up to the election. So I don't think that silver, I mean, next week's going to be interesting, but I don't expect silver to be over 35 on election day. If it is, I'll be a little surprised. I'll be a lot surprised, excuse me. And so I think that silver will be below 35 before the election. And then when the election occurs, if Harris wins, I think we get a big pullback, crash in the market, and a significant pullback in gold, silver, the miners. It's going to be in my opinion, be a mild crash because gold wants to go higher. Remember before I said gold wants to go up and the stock market wants to go down. Now, I think the next topic we really need to talk about is why is gold at an all-time high? Why is gold trending here? Now, we know why the stock market is trending high. It's basically just been in this bull market and it's just been trending because of liquidity, but it's not really based, I don't think it's based on fundamentals. It's just based on liquidity. And that's it. And the economy, the underlying economy doesn't really support it. I think the stock market's overvalued by 10% at least. And it'll fall because it's valued over 10% based on current economic growth. So if we go into recession and the economy weakens, then the stock market's overvalued even more. if that makes sense. So as the economy slows, the stock market has to come down to correlate to that weakness in the economy. That's why I think the stock market is going to crash.
Supply and demand dynamics are playing a crucial role in silver's current and future price trajectory. Right now, the global silver market is facing a significant supply deficit. From 2021 to 2023, the shortage reached over 663 million ounces, almost 80% of the annual global mining output for silver. And the forecast for 2024 isn't much better, with an additional shortfall of 215 million ounces expected. This mounting deficit is creating immense upward pressure on prices, making silver a hot commodity in both industrial and investment circles. On the industrial side, the demand for silver is booming, particularly in the renewable energy sector. Solar panel production relies heavily on silver's conductivity, and as countries ramp up green energy initiatives, the need for silver is outpacing supply. For instance, India's Reliance Industries has faced such difficulty securing physical silver that they've turned to COMEX futures contracts and demanded physical delivery of millions of ounces. Meanwhile, China, unable to meet its soaring gold demand, has urged its citizens to purchase silver, driving prices above global spot levels. This imbalance between growing demand and limited supply is setting the stage for a surge in silver prices. As industrial needs clash with investment demand, it's only a matter of time before we see how this deficit will impact silver's price trajectory. Could this supply crunch be the catalyst that pushes silver to break through resistance levels and reach all-time highs?
I think the reason why the stock market is high and gold is high is everybody's expecting a Trump victory, because if you look at the Electoral College, Trump has a real strong hold on it if he holds the South. So when he lost North Carolina and Georgia in the South, but now he has a big lead in the South. So if he holds the South, it gives him a big advantage. Then he only has to win like 2 states of the rest of the battleground states. So Georgia, Florida, and North Carolina in the South were always battleground states. And right now, Trump seems to have a lock on those 3. So if he knocks out those 3 battleground states before the election even begins, gives him a big edge. So I think Wall Street, I think, is kind of pricing a Trump victory here. And I don't think that's what's going to happen. And so if he does win, I think we keep melting up. So basically the David Hunter scenario is correct. We're probably going to go to 7,000 on the S&P if Trump wins, and gold will just keep, like it's been doing, will just keep following higher, and silver will follow. And so it's basically the melt up, the David Hunter scenario. But I actually think Harris is going to win because, I'll be blunt here, is because I don't think that our election, what we have in place to prevent cheating is sufficient. And so I think cheating is easy. And I think it happened in 2020, it'll happen again. Now, what I mean by easy is stuffing the balance box with basically forged melon ballots, because all you have to do is copy one. You can copy thousands of them and then stuff those melon ballots, stuff the ballot box. The reason why I say it's easy is because if you go back and look at 2020, only 1% were rejected. And did we hear anybody say anything about rejected forged ballots? No, we didn't, because they weren't checking them. The only thing they were checking for is signatures. They weren't checking for Social Security number, making sure one Social Security number, does that Social Security number match the name? They're not.
Technical levels and market momentum are crucial factors that could accelerate silver's rise. Right now, the silver market is hovering around key levels, with $32.50 acting as a significant resistance point. This level has historically been a ceiling, but recent market behavior suggests silver may finally have the strength to break through it. If silver manages to close above this mark, it could trigger a rush of FOMO, fear of missing out, trades, pushing prices even higher. What's interesting is that analysts are now eyeing $35 as the next critical milestone. If silver reaches and sustains this price for a couple of weeks, it could signal the start of a full-scale breakout. Technical indicators, such as the Relative Strength Index, RSI, are already showing bullish momentum, indicating that buyers are gaining control of the market. Should silver breach this $35 level, historical patterns suggest we could quickly see a rally up to $40 and beyond. This technical setup highlights how pivotal the current moment is for silver investors. As momentum builds and silver inches closer to these key thresholds, will the market react with the kind of explosive growth seen in the past, or will resistance hold it back once again? The next few trading sessions could determine the trajectory for silver in the months to come.
Next week, so we need to hold 33 next week. I think next Friday's close is going to be really important, because if we slip back below 33 next Friday, I think that's very telling for what's coming for the election. So it's important that we stay above 33. Then it's important we get above 35. So I don't think we're going to get above 35 before the election. And once we're above 35 firmly, say for 2 weeks, and then the HUI gets above 350. Remember, the HUI and silver are way off their highs. Silver's high is 49 and the HUI's high is 635. So we're way off these highs. So if we get above 35 for, let's say, 2 consecutive weeks, then I think silver has broken out and is going to rip. I'm going to take a drink here. So silver gets above 35 for 2 weeks. I think silver's going to rip to 50 fairly quickly, like within 2 months, and then it'll keep going. The inflation adjusted high for silver is actually $68 in 2011. I think that's where we're heading. You get above 35 and you're probably heading all the way to 65 before it corrects significantly. Say it corrects more than 10%. So we're getting, these levels are really important, because once you truly break out, you're off to the races. So gold is a good example. So gold broke out in March and it broke out at 2070. Once it got above 2070, it never even retested 2070. So it basically ripped higher, like to 2300, and it held. And once it got above that breakout and held, it just kept going and going and going. We haven't had a correction in gold all year. We had a really mild correction in May, and that was it. This summer, basically gold and the S&P have been trading together. And so I think S&P wants to go lower. My feeling is that it wants to roll over. They want to go in opposite directions, and gold wants to keep going higher. And so the big question here is, why does gold want to go higher? Why is gold at an all-time high? I think that's a really important question that we should talk about. And I have more to say on the election.
Central banks and institutional moves are becoming major catalysts for silver's price movement, and the recent developments are significant. For the first time in decades, central banks, most notably Russia's, are adding silver to their reserves. This is a shift from the traditional approach, where gold was the primary precious metal held. Russia's central bank, historically one of the largest global gold buyers, has now diversified its holdings to include silver, platinum, and palladium. This move isn't just about adding variety. It's a strategic decision that could have substantial ripple effects on the silver market. Why is this important? When central banks begin accumulating a commodity, it typically signals to the market that the asset is undervalued or poised for future gains. The fact that Russia is purchasing silver indicates their belief in its potential as a store of value amid global economic uncertainties. This could inspire other central banks, especially those within the BRICS alliance, to follow suit. If multiple nations begin adding silver to their reserves, the resulting demand surge could push prices significantly higher. Furthermore, institutional investors are also ramping up their silver holdings. As concerns about the U.S. debt situation and potential economic instability grow, institutions are increasingly turning to silver as a hedge. This combination of central bank and institutional buying could create a powerful upward momentum for silver prices. The question is, will this growing demand be the tipping point that propels silver past its historical resistance levels and into a new era of price highs?
Historically is considered, well, not historically, our generation is considered only a commodity. However, it also becomes a monetary metal when it's a proxy for gold, which is what is happening this week. Silver's turning into a proxy for gold. That's the reason why it jumped today. And that's the reason why once silver gets above $35 for, let's say, 2 weeks, it's going to rip. And the reason why it's going to rip is because of this movement into being a proxy. Now, silver, when you want to buy silver, you really have like four choices. One, you can buy premium coins, sovereign coins, but they have huge premiums. So the average person really doesn't want to buy those. Then you can buy rounds, silver rounds, but people aren't super excited about buying rounds because you buy $10,000. So what people will buy them. But the other is you have 5-ounce bars, 10-ounce bars, and 100-ounce bars. Most people don't want 100-ounce bars. They weigh 7.5 pounds and they're unwieldy. And after about 5 of them, you can't even carry them. So, but people love 5-ounce and 10-ounce bars. Those are the favorites, right? So nobody really wants. In the last year, if you had a coin shop, there was more sellers of silver than buyers of silver. 5-to-1 to 10-to-1, depending on the store. Nobody wanted silver this year. They were sellers. Go to any coin shop and ask them. I've got 5 or 10 more sellers than buyers of silver. Well, silver's a giffen good. And what that means is that silver actually becomes more popular as it goes up in price. So once silver gets above $35, you will not be able to find a 5-ounce or 10-ounce bar. They'll be gone. What happened to them? Because there's not a lot of inventory, and it doesn't take much to soak them up once it basically becomes a monetary metal. And so that's where we're heading. We're heading, when silver rips from 35 to 50, it's going to be kind of mind-numbing how it shifts psychologically from I don't want any silver to give me all the silver you got. That's kind of what you'll see. People go into the coin shops and go, I want all your 10-ounce bars. And the guy will go, I don't got any. So
economic indicators are aligning to create a highly favorable environment for precious metals like silver. The U.S. national debt has surged to unprecedented levels, raising concerns about the stability of the dollar in the broader economy, with speculation mounting that the Federal Reserve might be forced to cut interest rates due to the country's financial conditions, rather than simply to control inflation. We're seeing a scenario where the traditional safe havens like U.S. Treasuries are becoming less reliable. This shift in sentiment is pushing investors towards assets that historically hold value during economic uncertainty, namely silver and gold. Real estate market instability is another crucial factor. U.S. mortgage applications recently dropped by 17.7% in a single week, the largest decline since April 2020. This signals a potential cooling of the housing market, raising fears of a broader economic downturn. When traditional investment avenues like real estate and bonds start showing signs of vulnerability, the appeal of silver as a hedge against economic uncertainty strengthens. According to analysts, this perfect storm of rising debt, potential Fed rate cuts, and real estate volatility is creating an environment where precious metals are expected to thrive. Don Current's analysis underscores that silver, with its dual industrial and investment demand, is positioned to outpace other assets in this climate. But with these mounting economic pressures, will silver become the ultimate safe haven, surpassing even its historical highs?
Playing catch up. So this was all about gold getting above $2,700. So gold got above $2,700 this week for the first time, which was very significant. And we had a GSR over 85. The GSR was squeezed, but gold, it just got so far ahead of silver that silver, it finally decided it was going to play some catch up. And once it got above 33, whenever you get above these important levels, you usually carry through. So silver went all the way to 33.70, 33.67. I have the spot closed, and it was at $34 in futures. but just a spot. And so you get these carry through. And so whenever you get bull markets like this, you get the GSR is going to squeeze. So the GSR squeezed today from 85 to 80, which is pretty tight. I mean, 85 to 80. And that's what I would say. The GSR is going to squeeze all the way down to, sub 50 very quickly. It'll go when gold's at 2,800, it'll squeeze down to 70, which would take silver to 40. And then at 3,000, it'll squeeze down to probably 50. So you're going to see this squeeze. And the reason why is because silver is a proxy to gold. And the only time people really want silver as a proxy is when people want gold as a proxy to systemic risk. So once gold hits kind of that threshold, and I thought 2,700 was a very important level. So once gold got to 2,700, people are like noticing, and they're like, okay, I need, gold is telling us a story. I need some gold. You can bet this weekend people are buying gold and silver. And the people that are buying silver are people that can't afford gold, because $2,700, $3,000 for a coin, that's a lot of money. But you can bet that people are buying silver. So a lot of this move in silver this week, silver today, is related to gold. Gold basically getting above 2,700 and becoming basically in people's eyes, and people noticing, what is gold telling us? Why are people buying gold? If people are buying gold, then I probably need some too, and I can't afford gold, so I need some silver. And so the proxy issue. So now
Silver's role as a proxy for gold is becoming increasingly evident as it catches up to the gains seen in the gold market. Historically, silver has lagged behind gold during rallies, but once it starts moving, it often does so with explosive momentum. This trend is playing out right now as the gold to silver ratio, GSR, a measure comparing the value of gold to silver, begins to tighten. Recently, the GSR was hovering above 85, indicating that gold was significantly outperforming silver. However, with gold now above $2,700 per ounce, silver is starting to gain traction, and the GSR is dropping. When the GSR drops, it means silver is gaining value relative to gold, and historically, these shifts have been precursors to significant silver price surges. What's critical to note is how silver's perception transforms in these moments. Typically seen as an industrial commodity, silver becomes viewed as a monetary metal when investors start seeking alternatives to gold. This psychological shift drives demand, especially among those looking for a more affordable way to hedge against economic risks. With gold prices reaching new highs, many investors unable to afford large quantities of gold are turning to silver as the next best option. The surge in demand isn't just theoretical, it's visible in the market. As silver approaches key levels like $35, we're seeing increased buying pressure. If silver continues to rally and surpasses this threshold, the GSR could tighten further, pushing silver prices higher at an accelerated pace. Could this momentum be the tipping point where silver stops playing catch-up and starts leading the precious metals market?
Trillion, and it stayed over $1 trillion, and we got stuck, and right now it's at like 1.9 for this year. So we got stuck into this, I call it a doom loop, where they cannot cut spending. If they cut spending, the economy will slow. And if the economy slows, then the liquidity, because we're so over leveraged, everything will basically blow up. So we have to have high deficits. That's the fiscal dominance. We're forced to have high deficits and high spending. We can't cut. And the doom loop is that if you don't, you crash the economy. But if you do spend, you crash the bond market. And that's where we're at right now. And the doom loop is already started. That's why gold's at an all-time high, because there's nothing they can do to stop it. Right now, what they're doing is they're printing money and expanding. And so now the bond market is fragile, and it's just going to get worse and worse and worse and worse. I think it'll last about 3 more years. That's about all we have left for the bond market. And then after 3 years, they're going to have to do some type of a reset. The reason why is because nobody's going to buy our bonds. It's going to be a slow, once we go into a recession, people are going to start selling bonds. A lot of foreigners and even Americans will start selling bonds, especially anything that's over 5 years in length. Like the 10s, 20s, and 30s, nobody's going to want to touch them. And people are going to be dumping them. And then people are going to start dumping fives. And they're going to have to be borrowing everything on the short end. And it's just going to be a train wreck. It's going to be similar to what happened in Japan, where the Japanese central banks ended up owning all the JGBs, all the government banks. But the problem is that all of those bonds were internal to Japan. Our bonds are external. So we have a much bigger problem than Japan had. And so
Don Current believes that if silver can break through and hold above the $1.35 level, it could quickly skyrocket to $1.50 per ounce or beyond. This prediction isn't based on speculation alone. Historical patterns show that once silver hits and sustains critical resistance levels, it tends to rally with extraordinary speed. The key here is maintaining momentum. If silver sustains $1.35 for at least 2 weeks, it would signal a strong bullish breakout, attracting even more investors and institutional buyers. But what's really intriguing is that some analysts project that this time around, silver could reach as high as $1.68, matching its inflation-adjusted peak from 2011. The convergence of industrial demand, central bank buying, and a shift in investor psychology towards precious metals as safe haven assets is creating the perfect environment for silver to surge. The current global supply deficit and economic uncertainties only add fuel to this fire. As technical indicators align and market momentum builds, the stage is set for silver to potentially shatter its past records. But will this breakout be enough to propel silver to $1.50, and possibly even to new all-time highs? The next few weeks will be crucial in determining whether this rally becomes one of the most significant in recent history.
So in 2008, the national debt was under $7 trillion. And then it just started exploding at about $1 trillion a year or more. We just kept doing it and doing it and doing it. Okay, so this is where the whole dollar system started to break. And now we're at the breaking point. Now it's become fragile. So what happened was when we started adding all of that debt, even though inflation wasn't exploding, it was still devaluing the dollar by injecting all that money. And foreigners were starting to get upset. China actually stopped buying our debt, I think around 2014. If you go and you look at where they peaked, that when they maxed out, and they actually started selling, you can actually see it. They were about 1.2 trillion, and now they're about 700 billion. It's been a steady decline. China basically finally said, okay, enough of this. And so all of that debt has made it much more uncomfortable for countries to use the dollar as the global reserve currency. That's why the BRICS have wanted to move away. And then once inflation started, so debt kept getting bigger and bigger and bigger. And the problem started to manifest where we started to hear the term of de-dollarization. You never heard that term until, I don't know, 2016, somewhere in there. De-dollarization. You never even heard that term. It was right because it wasn't that in the 1990s, you never heard that term. So I don't know, somewhere around 2010 to 2015, somewhere in there, we started hearing that term. And now we've reached a point where now we can get into the fiscal dominance problem. So the US government and the US Treasury, they recognized that if we don't spend money, this started in 2020. If we don't spend money, they basically call them transfers, dollar transfer, where the government basically gives people money or gives businesses money. They're called transfer payments. If we don't do that, the economy is going to stop, or the economy is not going to grow. And so we got the deficit jump to
all these factors, geopolitical tensions, supply deficits, institutional buying, and technical momentum, are aligning to create a powerful setup for silver's price to soar. Don Current emphasizes that this could be the perfect storm needed to push silver beyond its previous records. If silver manages to hold the $1.35 mark and build momentum, we could see it climb to $1.50 in just a matter of months. But it doesn't stop there. With the right conditions, such as ongoing central bank accumulation and rising demand from industrial sectors, silver could even surpass its inflation-adjusted high of $1.68, potentially reaching uncharted territory. While reaching these heights might seem ambitious, the convergence of these economic and market dynamics makes it not only possible but increasingly likely. Silver, as both an industrial and monetary asset, is uniquely positioned to benefit from today's uncertain environment. For those watching closely, this might be the opportunity of a lifetime. But remember, these predictions come with their own risks. Markets are volatile and nothing is guaranteed. Always conduct thorough research and consult with a financial professional before making investment decisions. If you believe in silver's potential and want to stay ahead of market movements, make sure to subscribe so you don't miss future updates and insights. And as always, this analysis is not financial advice. Stay informed and invest wisely.
The dollar, the global reserve currency, has worked fine. Remember, we didn't have any inflation until 2020. So we had basically low inflation from 1985 till 2020. And so that low inflation made it okay to hold dollars, if you will. It kind of worked, and the euro dollar system exploded because of that situation. They were fine with dollars. And they're basically, foreign banks were making loans in dollars left and right, saying, yeah, we love dollars. And so the whole dollar global concern, it was working. But what happened was the US economy started faltering after 1998. So we basically peaked in 1998, and then 99, basically the dot-com bubble started to pop in 99 and 2000. And that was really the end of the US economy's ability to grow on its own. So from that point forward, the Fed's balance sheet in 2000 was less than $1 trillion. I mean, we had a strong economy. Our national debt was like under 4 trillion in 2000. It was like small. Now it's at 35. We didn't have a debt problem in 2000. We were like doing well, but everything broke then. And so from 2000 forward, it started getting, and then so we had the recession in 2000, and in 2001, it got worse because that's when 9/11 occurred. And that really hurt the economy as well. So we had back-to-back economic events that hurt the economy severely. And then they basically that's when the Fed started managing the economy. And they lowered interest rates, and they created the bubble in the housing market. They basically created that huge bubble. And that's when the everything bubble came after the housing bubble. And then they started manipulating. Then they took rates. Then we were growing. The economy was growing in 2009, and they took rates to zero when the economy was growing. And simultaneous to that, they were expanding debt starting in 2008 at $1 trillion a year. And that's why we went from